Okay, yeah, good. Good afternoon that side. Hello? Hello? Okay, hello? Are you able to hear me? Are you able to hear me?
Hello?
Yes, are you able to hear me?
Yes, I can hear you.
All right.
Can you hear me?
Yeah, I can hear you.
Okay. I can hear myself.
Huh?
But the only thing is, I can hear you on my headset. I don't know why.
Oh, okay. Maybe it could be with your headsets. Maybe try to fix them.
Okay.
Are you able to hear me?
I can hear you.
So without the headsets, you can hear me.
I can hear you, but it's on the speaker of the laptop.
Oh, okay. All right.
But that's fine.
Yeah, that's fine. That's fine.
I will try another headset to see if something will change in it.
All right, no problem.
Now, can you speak
Yeah,
again?
I can
Yeah,
hear you.
Yes, I heard you on my headset now.
Okay, yeah, let's get started.
Yeah, but before we get started, I told you I had to explain you why I can't do that.
Yeah,
you remember when we just started chatting on Fiverr before we start the course, right? I told you I started already trading and I left. You remember that I told you that?
Yeah, I remember.
Yeah, so it's because I had a a very bad experience on Fiverr because of an order I accepted and I didn't receive the order. And instead of getting the order, the guy sent me some kind of spiritual stuff and he said that he will kill me. I sent me this message every day. He sent it to me. I didn't respond to him. And after a month, I go back to Fiverr and I said that if someone put an email address, it pop up. It says that you should not do that. If you put the money sign, something you have a notification and said that, hey, watch out. I don't know if you can see that sometimes. But this guy is treating me on the website, on Fiverr, months, and they don't say anything.
Okay.
And they said that I have, the guys should not do that, but I should not accept the order. But I said that, I told them, if you don't give me my money back, I will file a complaint. I will go to police. And they give me the money back, my money back after that. And the guys continued to doing the same thing to me.
Okay.
After that, I said that, I go back to them. I said that if you do not disconnect these guys, I will file a complaint. If you don't do that, because if it was some, it's because there is someone at Fiverr who work with him. Okay, we're trying to do this stuff with him. It was not simple. It was really a bad experience. I can't tell you anything, all this stuff, but it was really bad.
Okay, so in short, I'm saying, so in short, because of that experience, now you have trust issues with sellers.
Yeah, I can do that. Yeah, I can. It's not only one, it's two guys, and the other one goes the money. I let him go because it was my fault.
Okay.
Yeah.
Oh, I understand. You should have told me that, because for me, the way I work, I know I've had such experiences with different. I've had such kind of things happening on Fiverr. This is why
there's a lot, man. There's a lot.
Yeah, there's a lot of scamming going on there and all that. That's why, for me, what I've done is just to prove that, okay, but what I'm really trying to do, okay, I could have been out of Fiverr. I could have been out of Fiverr because I don't even maybe get a lot of clients from there, but I could have been out of there, but maybe because of the few that I would want to, I want to help. All right, that's the reason why I've decided to stay there, and also to extend my services beyond the description of my gig. All right, and I do that in order just to show that, okay, there are people that can be genuine, all right, alongside those that may not be genuine, those that may be scamming. And I know Fiverr does a little to help out in that regard. It really does a little to nothing to help out. Even as sellers, we are also affected by the same. You find that, okay, you have a deal with a client, with a buyer. The buyer orders your gig, all right, and you send him everything and all the information you sent, and you even deliver the gig. And then after you've delivered the gig, then the guy just cancels the order and all those things. Wow. And then you get into a conflict.
They do that?
Yeah. And then now when you try to,
so you can understand, you can understand what's happened to me, right?
Yeah, I do understand. This is why I was like when we began, this is why at first I sent you everything. I sent you my full course, all right, to prove to you that, all right, what we are into is something that is serious. I don't usually do that because that course alone, it's a separate deal. All right, I don't normally put it in $100 gig. What's $100 compared to the knowledge that I'm going to give you? It's nothing. You see, it's nothing. Yeah. So it's just there to show that, okay, but what I'm trying to do is to gain, trust with the people that I'm working with, so that I don't have to suffer the same, things where, because to my side, if I didn't know what you've gone through and your experiences with Fiverr, to my side, I was also thinking of you as a scammer because I've dealt with such kind of individuals before. You understand? So I was thinking, okay, so this is a guy that just wants to use me, get the knowledge out of me, and then in the end refuses to accept the order and everything. Okay, anyway, it's good, it's okay. That's why I had to come out that strongly. Understand? Because I also have my own fair share of what usually goes on Fiverr. You get it? Yeah, but it's just that at first when I explained everything to you, I know you didn't trust me, and this is why I've been trying by all means.
No, it's not because I don't trust you, my friend. Like if we had some relationship before, I could accept that. But
yeah, I know. You know, I don't blame you. I don't blame you for that. We are just meeting for the first time. I don't know you. You don't know me. So yeah, it's something. Yeah, but like I'm saying, for me, this is me. All right. I know you don't need to trust me, and I get it. You don't need to trust me. All right. Yeah, but one thing that I've really tried to do is to gain the trust of the people that I work with. And there are clients, even right now, which I'm still working with on Fiverr. Right now, we developed a relationship since somewhere last year, somewhere 2 years ago. And I'm still working with them. I'm still mentoring them from their $100 gig, which they bought. And it has become a friendship kind of relationship. I've got others from, I think it should be USA. Others, they bought the gig, and then after the gig, you know, the days elapsed and all that, it was time to deliver. I had not yet completed my days as I've indicated on the gig. And I just said, oh, you know, man, I want you to approve that, and we shall continue our mentorship because I'm looking at time and blah, blah, blah. And then the person just goes ahead and does that. And up to now, I've continued mentoring them. All right. So tomorrow I'm having another session with another guy. For me, I look at it as a lifetime thing that I can just do to help out, because in this industry, there's a lot of scamming. You get it? So even just getting the right information, it will take you a whole lot of time and money just to get the right information from the right kind of a person who is there to help you get the knowledge and apply it on the charts. Okay. So this is how I do my work, and I do it from the point of trust and sincerity so that I can help as many as I can. Yeah, there are bad guys there, and it's okay. I understand if you don't trust me, it's okay. So we can still work until I deliver all my 4 days, because there it is written 4 days. I can deliver all my 4 days and we can part company, or you can say, you know what, man, I still trust you. I think we can take this relationship a little bit further. It's up to you. But for me, I'm just going to do my work as stipulated by the gig. And the reason why I sometimes extend, because I know the kind of information that I have, that if I gave it to you in 4 days, you won't still be able to consume it all in 4 days. You see, it's not possible. Okay, that's why I've decided to extend to say it goes beyond 4 days. It's a situation where it's a system which I've developed where I keep on mentoring you even outside Fiverr. We can still be using the Fiverr platform, it's okay, but the relationship continues because I want to guide my learners until they become profitable. I do assist a lot. Today I've assisted, okay, let me just say, I don't have to say much, but if this relationship will continue, then you see for yourself to say, oh, okay, sorry, man, I thought you were like these kind of guys, but I can tell you I'm not that kind. Are you getting that?
Yeah.
Yeah, so that's that. All right, we can begin. I don't know if it's okay. We begin. So no, I've extended to another day because it can only give me, I'm sure the extension is, it's only allowing me 1 day. So I don't know. I've already extended, but I don't know if you have approved, because here it's telling me that my delivery is it is delayed. So
no, like even if you deliver the order, I have 10 days to accept it. If you deliver the order,
yeah, it will be after 3 days before I accept.
Yeah, I have 10 days. Like after 10 days, I think if I don't approve it, it will automatically approve. But I will not do that. I will don't have to do it because you give a lot of it. So Well, I won't let it pass. Even if you deliver it, I can still do it after.
All right. Yeah, I just want you to
Because,
trust me.
yeah,
I know the experience that many traders go through, and I
you know,
know
if it was, if we were out of fiber, I would send you what the guy sent to me, and you would say, "What?" You would never believe me. Okay.
yeah, I know. I understand you. So it's just that we were not understanding each other. So my side was on the side of sincerity, your side was on the side of suspicion. So we got off on
I don't have any
different grounds.
trust.
Yeah.
You see, and even though I met a guy recently here on Fiverr, and he said that so I trust him and I pay him. So when I finish, I pay him and I said that, okay, so you'll have me, this is what I give you for this and that. And the guy is gone. We talk like two friends. He's gone. He never talked to me.
He never talks to you.
Yes, I don't know if it's Fiverr who's flushed his account who blocked him, but he's no longer at Fiverr now.
No.
Gone. Yeah.
All right.
So it's not something like 2 years ago, like I told you. It's now before I met you this last 2 weeks. I met him.
Serious. Ish, that's really bad. That's really bad.
Yeah. So I had a lot of experience, a lot of bad experience on Fiverr, man. A lot.
Okay. I understand. I understand you. I'm sorry for judging you. Yeah, sorry for judging you, but
no problem. I don't care about that. But it's I spend a lot of months like this. If it wasn't my brother, when I called my brother and said, "This is what the guy told me," I paid him. This is what he's trying to do. He said that he will kill me. He told me, "Give me his phone number." I said, "No, I won't give you his phone number. No, I have to talk to Fiverr and solve this." So yeah. So anyway, I don't want to get back to it. It's because it was so bad.
It is well. I understand. It is well. All right. Okay. Let's then get started with the work. Let's continue from where we left off last time. So I believe you went through what we looked at last time.
Okay.
All right. So today we are going to take it a little bit further, and we also are going to do much of the chart work, and we'll see how what we're going to cover, how far we can go, and all that, so that at least we can start working and dealing with the charts. The practical side of things. Okay, but before we get into the practical side of things, we left off on I think we were looking at two types of pullbacks, and then after we looked at the two types of pullbacks, there is a change of character that we were looking at. Well, we said that price is going to give you the two types of confirmation that you will need to look out for whenever you want to take a trade. And the first one, we said it's a change of character. Then you have a change of character plus flip, and then you have a change of character type of trades and entry confirmations. Yeah. So now, let's just add on and look at the multiple time frame market structure, and which is something that you are going to work with quite a lot, because as you'll be analyzing multiple time frame market structure. So as you'll be analyzing, you will discover that different time frames, price in different time frames would behave differently. All right. So price in different time frames will behave differently. And also the other thing that you also need to understand is that the market is fractal. And what does that mean? The fractal nature of the market simply means that what the market does on the higher time frame, it does on the lower time frame. Okay. What the market does on the higher time frame, it does on the lower time frame. So let me just give an example of a move, let's say a 3 move right here. Okay, a confirmed, let's say this is a confirmed trend. Like we said, for us to have a confirmed trend, we need 2 highs and 2 lows. Exactly. So we have a confirmed trend right here. So we have a low, a high, a higher low, and a higher high right there. So this is a confirmed trend, meaning that we'll be looking for a buying opportunity the moment price pulls back into our discount area of this market. So I'll be looking forward to buying the market the moment price comes back to this area of our interest, or the moment price comes back to our discount area of this range. All right, so this is the range that we are focusing on, and price, this is our buying area. When price is in our premium, we don't do anything about it. All right, so now let's say this black line, it's maybe our daily time frame. We are looking at the market on the daily time frame. That's a daily time frame. All right, now when we go on the lower time frame, all right, one thing that is quite important that I would want to make note of is a swing on the higher time frame. So I'll say on the higher time frame is a trend on the lower time frame. Lower TF. So a swing on the higher time frame is a trend on the lower time frame. A swing on the higher time frame is a trend on the lower time frame. A swing on the higher time frame is a trend on the lower time frame. Now, like we said, what is a trend? A trend is a series of highs and lows. So, exactly. So now let's say this is going to be our 4-hour time frame. Let me give it a different color, maybe orange. So on the lower time frame, what is a swing? This is a swing from this low to that high. That's a swing. So from this leg here, from the low to the high, that's a swing. From that high right there to this low to come and create a higher low, that's a swing. From this low right here to that high, that's a swing. So a trend is a series of swings, swing highs and swing lows. All right, that's a trend. Okay, so now a swing on the higher time frame. So this leg from this swing low to that swing high on the higher time frame, but on the lower time frame, it is a trend. And a trend, we know, 2 highs, 2 lows, lower highs, lower lows. So let's say the orange line is a 4-hour time frame. So what we're going to have is we're going to have a trend. What is a trend? A series of highs and lows. So if you're looking at the market on the higher time frame, it would look as if it is just one push to the upside. However, when you go down on the lower time frame, what you're going to begin seeing is you begin to see a trend. All right, you begin to see a trend, and this is how the market works, and this is how the market functions. Although it will take so much, it will take much faster for the structure on the lower time frame to happen than it will for a higher time frame structure to do what? To happen. All right, so what we have right here is a trend. So you can see we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. Now, what does that tell us? All right, so the moment price shifts from being a bullish market to being a bullish market on the lower time frame, it means then that a high on the higher time frame has been fixed. So this then now becomes our higher high. All right, this now becomes our higher high. All right, and how can we tell? We can tell only when we see the lower time frame structure shifts from being a bullish trend to being a bearish trend. So we can see that this bearish trend right here, it is just there to do what? To facilitate a pullback. It is there to facilitate a pullback. It is there to allow a pullback to happen so that the market can go and mitigate any areas of interest right here. And now, once that pullback has come to an end, we want to see this lower time frame market structure, which is the 4-hour time frame, to shift from being a bearish trend to being a bullish trend. And where does that shift happen? So we see that shift happen right here. So the moment price begins to trade above the previous higher low that created the higher high and continues creating higher highs and higher lows, then we know that now the market has finished creating a higher low, and now it is creating a swing structure to go and create a swing high. Is that clear?
Yeah.
All right. So that's how it is. So now I'm going to draw it a little bit better so that we can add multiple time frame structures to it. So we're going to have a 4-hour structure like this. And then after the 4-hour structure is done, meaning that after the higher high has been created, then price will begin pushing to the downside like this. And then again, we begin to see price then begin to push to the upside, creating higher highs and higher lows like that. All right. So
if I understand, you are trying to create a smaller time frame, right?
Yes, exactly. So this is a smaller time frame. All right. And the reason why I wanted it to draw it like this is so that we may bring in the aspect of what? Of break of structure. So we have a low, a high, a higher low, a higher high. What do we have? We have a confirmed trend on the or let's say on the lower time frame. So maybe let's say this is going to be MBOS, meaning minor break of structure. Why? Because it is the one that is found on the lower time frame. Right. So again, we can see that right here we had another break of structure. And also right here, we had another break of structure. And you can trade this. This is how we catch moves. All right. So how do you trade this? It's simple. What you need to do is you wait for price to do what? To pull back into the discount, just like we have looked at when we were looking at the discount and premium. So you'll be looking for buying opportunities in these regions. You see, that's why you'll be looking for buying opportunities. All right. In order to trade that daily structure to the upside. So you're not just going to trade the daily structure to the upside, you trade the daily structure to the upside using the lower time frame structure. All right, so the lower time frame structure is going to give you a better entry. It's going to give you at least a proper structure where you can look at where you can at least see where you can take some entries from. So let's say we have a low, a high, a higher low, and a higher high. Then price pulls back, we look for our entry. And if we look for an entry, let's say for argument's sake, we look for our entry right here. Where will be our target? Our target will be maybe the previous high, meaning that if price is coming from somewhere, we will target the previous high. All right, we'll target the previous high, and I'll explain that more in details once we start looking at the market structure. I mean, the chart itself. Okay, so that is how we are going to approach the market. All right, that's how we're going to approach the market. Now, right here, we can see price created a higher high, put back. There was no trade because the market never came down into our what? Into our discount area. So this is a scenario where there is no trade. And price again, let's say price breaks to the upside and you put your gun box and you are waiting for price to do what? To pull back into the lower, into the premium, discount area, in order for you to start looking for buying opportunities. Why? Because according to our rules, we said that the market should, an uptrend market, what an uptrend market does is that it breaks highs and respect higher lows. So we wouldn't have known that price was going to do what? To break below this low. So obviously, we would have been looking for what? For some buying opportunities. So we keep on buying in an uptrend until buys cannot work anymore. So let's say, for instance, we have been taken out and price breaks to the downside. So now that we have been taken out and price breaks to the downside, what are we now thinking? We are thinking of a potential reversal. All right, we are thinking of a potential reversal. It is not a reversal yet because we only have one low and one high. So we are thinking of a potential reversal. All right, until price pulls back into this area, let's say into the premium of this leg from that high right there to this low. So until price pulls back All right. So if price pulls back, then we know that, okay, and it fails to take out that high, then we know that, okay, the downtrend has been established. Why? Because we have now created another lower low. So we have two lows and two high. Now we know that we are in a downtrend, but also we need to know that this downtrend, right, this is happening. It's a pullback of a higher time frame. What? Daily structure. So the higher time frame is still bullish. All right. So this is going to be a pullback. All right. It's a pullback of the higher time frame, because sometimes it's easy to get lost into these pullbacks. All right, it's easy to get lost, more especially when you're looking at the lower time frame, because what you begin to see is that you begin to see a trend. So price to create a lower low, lower high, lower low, and you begin to see a trend. All right, forgetting that it's just a daily pullback. The market is just pulling back on the higher time frame in order for it to continue creating new highs on the higher time frame. Are we together? So in as much as we can take those pullbacks, and in as much as we can take those trades and continue going with the market, what the market is giving us and what the market is showing us as it is pulling back, all right, we need to also know that, okay, I'm in a uptrend. So this is a pullback which may not continue for long, because the price may create a higher low, and then now it continues in its original trend to go and create a new higher high. So again, what we have to continue looking for is, we need to continue looking for break of structure. So let's say again here we have a break of structure. Now after we have a break of structure again here, what are we looking for? Price must pull back, because every time there's a break of structure, the next thing that we expect to see the market do is a pullback. So again, we take our gun box from that high to this low right here. So let's say in this situation, we took our sell, because now this is a more confirmed what? Sell, and this sell is in our premium zone. So this is a more confirmed sell. So we take that sell, and we may, at very least, we may target the next lower what? We may target the next lower low, all right, which is this area right here. So we target that area, and it's an easy trade that you can just take, following what? Following the market structure, just like that on lower time frame. But even as you're taking that sell, all right, you shouldn't take it with the idea that the market is going to take out this bigger low. No, it will still respect this low, because the market is in an uptrend, and its job is to respect higher time frame, higher lows, in order to continue its higher time frame what? Higher time frame trend. But what we see is that a swing on the higher time frame is a trend on the lower time frame, and we can continue trading those trends until those trends may never wake again. Okay, any questions?
Can you hear me?
Yes, I can hear you.
Oh, okay.
Yeah, I'm asking, any questions?
No, I said that it's okay now.
All right, okay. So right here, after price now has hit, maybe let's say on a higher time frame, we identified, let's say there was a demand right here that we had identified on the higher time frame. All right, let's say this is our demand, and upon price hitting that demand zone, all right, what happens? The market changes the trend. So the lower time frame changes. All right, we see the market, instead of respecting this lower high, price breaks this lower high. All right, now after price breaks this lower high, what happens? We have shifted now. We are now what? Bullish. All right, and if we are now bullish, what will start happening? We'll start looking for buying opportunities, and of course this is what happens. So price gives us a higher low to confirm a trend. So it comes, gives us a higher low, then it breaks and gives us a higher high. Again, what happens? We break structure. Let's say we had a buy, maybe on using lower time frame confirmations. We have a buy, for argument's sake. Let's say we bought from here, price then pushes its way, creates a new higher high. Then after it creates a new higher high, what do we expect the market to do? The moment the price breaks out of a range, we expect a pullback. All right, so what we have right here is price then begins to do what? Begins to pull back. So where did that pullback come to? Let's say the pullback came into this discounted area, discounted area. Again, we buy from here. What are we targeting? At the very bare minimum, we are targeting this high, but also we can take a trade from, this is how we take a trade. We can take a trade from here using lower time frame confirmation, let's say H4, and target the higher time frame. What? The higher time frame structure. All right, let's say there was a zone here that we picked, and that's how we take trades, and that's how we maximize on those big risk to reward kind of trades. All right, so now price continues creating new highs and new lows until we break out of what? Until we break out of this trading range, until we break out of this daily trading range. So this one is going to be our BOS, MBOS, I mean. So until we break out of this daily trading range, which is from that high to this low, all right, and then we break out. Okay, so now price may even continue, you know, creating lower highs and lower lows, but we need to also be careful that the moment we break out of this structure, the next thing that we may observe is that price may want to pull back. That's the next thing that we may want to see. Price may want to do what? May want to pull back. So we need to become now very much careful on how we take those trades, because we don't know when price or how long price will go before it does a pullback. All right, no one knows how far the price will go before it does a pullback. But one thing that we need to know is that the moment we see the daily, I mean the 4-hour trend, let's say it shifts and price begins to create lower lows, then we know that daily now is doing what? Daily now is doing a pullback, or daily now is getting into a pullback. Okay, any questions? Any questions?
Well, that's fine now.
That's fine, right?
Yeah.
Okay, and then now, while we are still looking at this higher time frame structure, let's say we have the 4 hours and we have the daily, right? There's also another time frame. Like for me, I don't know about you, what time frame you will choose and you will stick with. But for me, I'm more of an intraday trader, and I take trades on lower time frame like M15 and H1. Those are the time frames that I like taking much of my trades on. Okay, so let's say this is
myself, I think I would prefer 5 minutes.
Oh, you would prefer 5 minutes?
I don't know what do you think about it.
Oh, okay, it's okay. 5 minutes is just fine. 5 minutes is just fine. It's just fine. Huh?
It's too short?
No, it's just okay.
Okay.
Yeah, it's just okay. All right, so let's say you go on the lower time frame. Remember, a swing on the higher time frame is a trend on the lower time frame. So from this swing low to that swing high on this orange line, that's a trend on the lower time frame. So if you switched on this leg on the lower time frame, what you're going to get is you also get a trend. And that's how price.
If you choose this shorter, a smaller time frame.
Huh?
If you choose a smaller one.
Which one? Yeah, that's a smaller time frame.
Yeah.
This one now is, let's say it's an M15 structure, right? And it will still do the same, all right? It will still do what the higher time frame is doing. Why? Because we are saying that the markets are fractal, and what you see on the higher time frame, you still see on the lower time frame. Okay, that's what that means. So what you see on the lower time frame is what you see on the higher time frame, except that on the lower time frame, it will happen far much faster as compared to the higher time frame because of the time in which the candlesticks are formed on the higher time frame. So let's say on a daily, it will take 1 day for one candlestick to close. So meaning that it will be much slower on daily as compared to M15 because it takes 15 minutes for one candle to form. So there will be a lot of candles on smaller time frame that will be formed, opened and closed as compared to the candles that will happen on the higher time frame. You get it? Okay.
It's so that each candle is a one day time frame. Each candle is given 1 day, right?
Yeah. Okay. So let me change this and make it a little bit different because it's also orange. So I'm going to make it green. If green is not so much visible, let's make it blue. All right. Yeah, something like that. So we can see already that we have so much of activities on the lower time frame as compared to the higher time frame. You can see so many trading opportunities that we can find on the lower time frame as compared to the higher time frame. And yeah, that's what the lower time frame does because of its time frame, which is lower. Right. Okay, so this is a structure. Okay, and you can see that the moment the 4H creates a new high, the M15 has to shift or has to change its trend and become bearish, etc., etc. So we're just going to end at, yeah, here. It's enough. All right, so now let's look at what is going on here. Okay, so we can see that from this low right here on 4 hours, from this low on 4 hours to that high, right? We have a trend. All right, we have that trend. And of course, it's a similar thing. We are going to do what? We are going to look for breaks of structure. All right, breaks of structure. And once we look for a break of structure, the next thing that we're going to look for is a pullback into either a premium or a discount area. So we have this one right here. Okay, so we are going to have so many ranges in the lower time frame compared to the higher time frame, but yeah, it is what it is, and that's how the market works. Okay, so you can see here we broke structure, put back maybe into our premium zone, broke structure again, I mean discount zone, broke structure again, put back into our discount zone, broke structure until finally the market broke structure also where to the downside. So here you can see that the market broke structure to the downside, meaning that M15 now is bearish. What does that mean when M15 is bearish? It means that now 4 hours will start pulling back, all right? Because now we were uptrend. So the moment price creates a higher high on 4 hours, the lower time frame trend must shift. It must become a bearish trend. And then after we create a higher low, how are we going to know that now H4 has created a higher low? We want to see the M15 do what? Shift. So again, what I'll be looking for is that the M15 at this moment is going to do what? It's going to shift. So the real break of structure on M15 will be above here. Now, sometimes what you observe in the market structure as we begin to look at the real market structure on the charts, all right, you observe that we are going to have a high, a higher low, higher high, higher low. Then we're going to have a higher high, then lower low. All right. This is M15. Sometimes it may be confusing. Okay. Why is this move from there to here all part of M15? Because the last higher low that led to the break of structure was this one. And we just, we took it out right here. And from there, price never put back to create structure until we created the low. And then price pushed its way all the way to the upside. Now, this higher low and higher high and higher high, this higher high right here and higher low is not part of what? Is not part of M15. Why? Because the M15 lower high should be this one, which led to the break of this structure here, creating this lower low here. You get it? So there'll be that kind of variation that you're going to see in the real-time structure that will sometimes may bring a lot of confusion when it comes to mapping structure, to a point where you start asking yourself, is this the H4 structure or is it the M15 structure? So sometimes M15 and H4 structure will coincide, which is okay. It is normal, all right? Sometimes the H1 and the H4 structure will coincide, which is normal. Sometimes the H4 and the daily structure will coincide, which is okay when it comes to mapping structure, because we are not dealing with a structure that is perfect. We're dealing with a structure that we are trying to at least make sense of whatsoever is happening on the market. You get it?
Yeah.
All right. So what happens? We break structure, then we pull back. Let's say this was just a minor pullback, right? Price never put back. Let's say from here, we're going to, if we took our gun box, we're going to take our gun box from here all the way to that high, right? And why are we going to take all the way to that high? Like I explained, this is the high of M15, which took out this low. All right. So if we are looking at the lower time frame structure, so I will do this. Let's just make it blue. So this will be the lower time frame structure: higher low, higher high, higher low. Then we have also the higher high right here. Then we have the lower low. So the higher high will be here, higher low, then higher high, then lower low, then lower high, then lower low, then higher high, then higher low, then higher high, just like that. Okay. And also at the same time, on the higher time frame, we are going to have a higher high, which is this one, and a higher low, which is this one. And price will continue doing or it's, you know, whatever it is that it is doing to print new highs and new lows. All right. So that's how the market structure will be presented. And it's up to you now to make sense of everything that is really, really happening in the market. So on our M15, we can see that right here, we created the higher low, then we pushed all the way to go and create the new higher high, then price put back, created the higher low, then a higher high, then a lower low. What does that mean? So once the M15 shifts from being a bullish structure to being a bearish structure, it means that the market now has printed a new higher high on the higher time frame. And now it's time for price to do what? It's time for price to start pulling back on the higher time frame. And the pullback of the higher time frame is given as a trend on the lower time frame. All right. So you see a trend shift on the lower time frame, signifying that now the market has created a new structure on the higher time frame. Okay. And that's how price is going to go. So in short, what are we looking at? All right. In short, what we are looking at is, what we're going to have is, we are going to have, let's say this is just one leg on daily, or let's say on weekly. So if this is a weekly leg, all right, I'll make it a little bit bold. All right, so let's assume this is even a daily leg. So this is one swing leg from a higher low to a higher high. Then if we go on H4, all right, H4, we're going to see something like this. We're going to see a trend. All right, we're going to see a trend. So if this is a leg, all right, the black line is a leg, then the orange line is going to be a 4-hour trend. All right, and if this now becomes a 4-hour trend, then if we go on a lower time frame, let's say the M15 structure, we're going to see something like this. Something like this happening or going on. That is on the M15. Now, if we even go much further and look at the M1, right? M1, what are we going to have? What we're going to have on M1 is even going to be
shorter. It's going to be shorter?
Yeah, it will even be shorter and very small. Okay, so we're going to have smaller structure. So we're going to have smaller structure like high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and lower low, lower high. So this is what is going to be happening on the lower time frame. That is the M15. I mean the M1. So you can see that the legs, the ranges will be shorter, very much short, as compared to the higher time frame. So the lower the time frame we go, the lower the ranges we need to deal with. Meaning that if you're taking your trades using the lower time frame, or you're trading on the lower time frame, then you're going to have very small target profits because of the short what? The short trading ranges. All right. So you can see how many moves we are having in just one M15 structure and stuff like that. And you can see how many times price keeps on changing its structure. You know, we were uptrend, downtrend, we become uptrend, we become downtrend, we become uptrend, and yet it is just one H4 leg to the upside. You see, so we're going to be presented with smaller structure, smaller ranges to deal with. Meaning that if I take a trade, let's say if I take a trade right here, my take profit will be small, very small. Right? I'm not going to swing for the fences because I'm dealing with a lower time frame. And this is what many again get trapped in, because they become too zoomed in, looking at what? Looking at let's say looking at this area here. So if you become too zoomed looking at this area, you will assume that the market is what? The market is downtrend. And what you'll be thinking is, oh, okay, now it's time to start selling the market because the market is downtrend. Yeah, you're correct. The market is downtrend because what you're focusing on is you're too zoomed in on one area, but the market is not necessarily like downtrend. It's just you who is zoomed in. All right, you're too zoomed in on this area right here. But the original trend of the market is uptrend on the higher time frame. So now if you can now be zoomed out and begin to see the higher time frame perspective, you'll be able to know to say, okay, I don't have to get involved into this. Let me wait for this to come to an end so that maybe I can take the push to the upside. That way you'll be able to look at the market from the higher time frame and be able to know what the market is doing and where the market is going. Okay. Any questions?
That's fine.
All right. So okay, so let's get to the chart, and some of the things that I may leave out, I will be explaining as we go. All right, so what we are going to look at now and what we are going to deal with is how to map your structure. Now, before we map our structure, there's just one important information that I have to give you. And this is according to me and how I want to classify my structure. And one thing that you need to understand is that when it comes to structure, there is no wrong or right way of drawing structure, right? There is no wrong or right way of drawing structure. Whatever method you choose to look at it is correct, right? As long as you understand and you're able to interpret what you're doing. So what I'm going to share with you is not a standard way of looking at structure, but it is something that has been working for me, and it has proven to be 82% accurate. It has been working for me, and it has proven to be 82% accurate, and that's what I use to have a win rate of 82% on Nasdaq. Okay, so
you mean that's your strategy? That's what you mean? You mean that's your strategy?
All this that I'm teaching you is my strategy. It may look like it's big, but it's kind of small, very small. All right. Yeah. Everything that I'm teaching you, that's my strategy, and that's what I look at. But I'm giving it to you in bits and pieces so that after we are done, then we can combine everything that we have looked at together in order to have one solid thing and be able to work with it. All right. So when it comes to market structure, all right, daily structure, I consider. So daily structure, I consider 250 points. In fact, we just start with 300 points. Okay, 4-hour structure, which is H4 structure, I consider 200 points. And then H1 structure, if I'm looking at H1 structure, I'll consider 150 points. And then M15 structure, I'll look at 50 points. Then M5 structure, I'll look at 25 points. So 25 points. All right. Now, what do I mean 25 points? What I mean is this. This point. So if on daily, price is pushing to the upside, creating higher highs and higher lows, for me to classify it as structure and a break of structure, all right? So to classify this as a break of structure, right? I'll have to measure the pullback. So the pullback must be 300 points and above. If it is 300 points and above, then that is structure for me. So you can see here, it is even 3,000 points because I'm using a daily time frame. Yeah. So if it is 300 points, I'll measure the pullback. So if it is 300 points, then that is structure. And if it is above 200 to 250 points, then it is 4-hour structure. And if it is above 150 points, it's 1-hour structure. All right. Meaning that if I see a structure which is 150 points, whether it's on 4 hours on daily, I'll leave it because it doesn't meet the standards for a daily. So a daily is 300 points. H4 is a 200 to 250 points. Daily structure, H1 structure is 150 points, and then M15 structure is 50 points, and M5 is 25 points. Okay, so that's what I mean. So it's to measure a pullback. So I measure a pullback like from that high to this low, right? From the beginning of a pullback to the end of a pullback that led to the break of structure, then I'll consider that as what? Structure, which is tradable. All right, so I'll consider that one as a tradable structure.
Okay.
Yeah, I'll consider that one as a tradable structure. Then I'll then be qualified to put my gun box and say, okay, let me wait to see how the pullback is going to be. And if a pullback happens and price happens to come into our discount zone, then I'll look for buying opportunities and then we'll buy the market to the upside. Does that make sense?
Yeah.
Okay, so now let us see how this information can be applied. Let us see how you can apply this information now on the chart. So we are going to begin from, now we can begin from anywhere. Let's begin from somewhere where, let's begin from even here. All right. I'm going to begin from here. So this is the daily. So we'll start from daily, mapping our structure until we get to maybe M15 or H4. So this one is just going to be specifically on just mapping structure. No entries, nothing. All right. So this is the practical side of everything that we've been learning on the market structure. Now putting it all together on the chart and see how we can map the structure. Okay. Let me try, because I think my daily, daily has a, yeah, it has something, a free version of bar replay. Unfortunately, my bar replay of the lower time frame has expired. So yeah, we just have to do it manually. So let's start from here. We can see this is a high, higher low, higher high. Now, is this structure? So we have to measure it from here, from that high to this low. All right. So come here and then you measure it like this. All right. So you can see 300 and what? 58 points here. So now if it's 358 points, is it a daily structure? Yes. According to our daily structure parameters, we said 300 points and above. So it's daily structure. So I'll consider it as what? As a daily structure. So this is my daily. So I've already created my annotations, right, which are here. And I believe in the course that I sent you, there is a part where you can create your templates. I believe it's there. I put it there. So we say this is daily. So for me, the break of structure, it means the break of this high, all right? And what I consider to be the break of structure, I pick a candle close, all right? So the candle must close above the previous high. Not just a wick, but a candle close. So if a wick happens to close above the previous high, that to me is not a break of structure. So what do I mean? Let me just bring in this because it's quite important. So if price does this, all right, let me just end here. So, okay. So if, let's say we had a candle right here. Let's say this is our daily candle. And what do we do? Okay, so this is our daily candle, and this is the wick of the candlestick, right? So that's the wick of the candlestick. And price is now beginning to push to the upside. Let's say it creates this candle and it creates the next candle. All right. And then let's say price then wicks like this. Okay. And if the market wicks above like this or below, even below, but if this is the kind of a structure that we have like this is not a break of structure. I'm not going to consider this as a break of structure. All right. Why? Because price never closed above. It wicked. All right. It failed to close above. So when they were making a decision on where to close the market, they made a decision not to close above, but to close above below this low, below this high, rather, below the tip of this candle, right? Which means that's not a break of structure, because in most cases, sometimes the market will do that and then it continues going to the downside like this. All right. So I don't consider that as a break of structure. According to this strategy that you're learning, this to me is not a break of structure. So what I consider to be a break of structure is when the market decides to close with a candle. So if the market does this, right, where the candle closes above, all right, then that's a break of structure. All right. The candle closes above the previous high, then that's a break of structure. So then this is going to be considered as a break of structure. I'd now pull back, and then we can continue buying the market like that. Okay, clear? Okay. It's clear, right?
Yeah.
All right. Okay. So now let's look at this high, higher low, higher high, and price continues creating that higher high. So according to our strategy, we need to put a gun box from this low right here until where price begins to pull back. So this is the high right here, and we don't know when the pullback will begin. So we'll keep on adjusting our gun box for as long as the pullback has not yet begun. So you can see right here, price seems to be giving us some signs of a pullback until price pushes to the downside. So if I was looking for some buying opportunities, all right, let's say I just looking for some buying opportunities without looking for confirmations on the lower time frame, then I'll wait for price to come to this demand. And again, don't worry at this point about supply and demand, about which zone to pick or where to buy from. This is just a structure lesson. So price comes here. Let's say I'm looking for a buy, because obviously, who knows what price is going to do next? So no one knows what price is going to do next. And you don't need to know what the market is going to do next in order for you to make money. That's what Mark Douglas says. So yeah. So then the market hits my stop loss. All right. After hitting my stop loss, then I have to start reconsidering my bias of the market. So what have we done? We have broken below this higher low. So now that we have broken below this higher low, what does that mean to us? It means that the market is bearish but unconfirmed. What does that mean? Because we only have one high and one low. All right, meaning that sometimes what the market can do is that it can come here. All right, once we start looking at supply and demand, you understand, and liquidity. So it may come here, and then from here, price may just reverse, right, and push its way to the upside. That does happen a lot. So we don't know whether that's what the market will do, or it will create for us a higher low, a lower high from here, and the market continues going to the downside. Again, we don't know how far the market will go before it pulls back, because we only need lower time frame confirmation. Like we said, on the H4, price is doing something like this. Let's say price is doing something like this. All right, that is what is doing on H4. All right. So if a higher low has been set or a lower low has been set, we want to see price then do this in order to create a what? A pullback. And then after a pullback is finished, we want to see the market to do this in order to continue creating the price going to the downside. All right, so these are the things that we want to see the market do. Okay, so let's say price continues going to the downside. It continues with this big bearish candle, all right, meaning that it never gave us that opportunity. So price then pulls back, all right? After price pulls back, we can now get our gun box from that high to this low. Again, we'll just want to see if price is going to fulfill its work. All right, so then we break structure. So we came somewhere into our premium zone, and of course, maybe on the lower time frame, we would look for some entries, etc., and you know, see how we can take the market to the downside, although it is still unconfirmed trend, but this is a daily, of course, so it may take a lot of time. Imagine from here up to where it took about 28 days just for price to drop. So this is daily. Okay, so we can still look for some trades on the lower time frame to take. So again, we have a pullback, and then let's measure that pullback if it qualifies. So this is about 826 points. So 826 points is way above 300 points. So it's a daily structure. So we'll mark it as a daily structure like that. Okay, and then from there, again, the next thing that we want to see is price to pull back into our discount versus premium for selling opportunities. All right, so let us see what price does. And there, does it continue? Let's see. So in this situation, price fails to do what it was supposed to do. So we can see that price breaks above this high. All right, so now that we have broken above this high, we are now unconfirmed bullish according to our market structure reading. We are now unconfirmed bullish. So let's say if you're taking a daily structure, maybe you would have taken one sale, which was in profit. The next sale, it fails to work. So if you say I was waiting for price maybe to come back to this area of interest, quite all right, you would get a sale right here for how many days? 1, 2, 3. Then it fails to work. Then price continues going to the upside. So yeah, there are such kind of situations that will happen. So this sale, price fails to continue going to the downside, which means that it is now shifting. All right, the daily is now shifting, but the daily did not just shift here. It started on the 4 hours. So if we go on the lower time frame, like on the 4 hours, as we are going to do later, maybe let me just try at this moment if it's going to accept. Let's see. Okay, so it's requesting that I get a full paid version. Right. Okay, where's the chart? Hello? You're there? Okay. Yeah, I'm just trying to look for the chart. I don't know where it has gone. Okay. Just a moment.
No problem.
All right. So let's hope our price will allow me to get that far. Okay, so again, it doesn't even allow me because I'm using a free version. All right. So let's look at the lower time frame. Let's look at the 4 hours. How would we have known that the market was going to change structure and this was going to be the low? So like I said, again, if you look at it on the lower time frame, all right, so you can see lower time frame, we had the lower low, lower high, lower low, lower high, lower low, H4, lower high, then lower low, then higher high, higher low, higher high, higher low, higher high, higher low, higher high. So you can see that right here, if we just take our price from this high to this low right here, you'd observe that there was a lower time frame structure. So we had the high, the low, the lower high, the lower low. We had the lower high right here. We had the lower low right here, lower high, lower low, until we break structure to the upside. All right. So that is, after we broke structure to the upside, it's a signal that now the daily lower low has been set, and now the market will start pulling back to go and create a what? A lower high on daily. All right, so again, like I said, H4, we still need to measure the pullback to see if it's 200 points. So you can see this is 400 and something. So it qualifies to be a 4-hour structure. So again, you can see what does price do? It creates a lower high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high right there, higher low right there, higher high, then lower low, meaning that, okay, the H4 will start maybe being bearish. All right, we may start looking at daily beginning to push to a downside, but then we need 2 lows and 2 highs to confirm, but that fails to work. Then we create a higher high, higher low, and higher high, then higher low, then higher high, higher low, higher high, just like that. So the 4-hour continues to push the market to the upside, as you can see right here, in order to go and create a daily what? A daily structure. All right, so this is how the market works, and this is how price works when you're looking at the multiple time frame structure. So this was our confirmation right here that the low on daily has been formed, because you can see we had a lower high, lower low right here, okay, and lower high, lower low, then higher high. So this shift from lower low to higher high, this one here, it's a confirmation that now the market wants to start pushing to the upside. Okay, let's go back to our daily and continue mapping our daily structure. Okay, until we finish mapping our daily structure. So I just took that detour in order to explain how the market shifts from being a daily structure, I mean, from after it creates a higher low or a lower low into creating a higher high, etc., etc. All right, so we have a lower low right here, a lower high, a higher high. Then, like I said, you in most cases you begin to see that the H4 and the daily, sometimes the structure may look similar, all right, but yeah, sometimes that happens. There's nothing that we can do about it, because the market is not going to always present to us a perfect structure that we're looking for. So this was a higher high. So from here, we created a higher high, then we had a higher low, higher high, higher low, higher high, higher low, higher high. Is it the higher high? Let's see if we closed with a candle. Yeah, a higher high, higher low, and price continued to go to the upside. So right here, we had a higher high on daily. And what happens? Price pulled back, but it was a very small pullback. Only 2 candles, 3 candles to the downside, and price never came back to our premium. I mean, our discount, but it respected this inner structure: high, higher, low, higher, high, higher, low, higher, high, higher, low. It respected the inner structure and continued creating new highs and new lows. So again, we see we have a break of structure right here. And after we have this break of structure right here, what do we have? We have a pullback. So the next range that we're going to look at is from here all the way to there. And we can see that in this situation, price indeed put back into our discount. So we'll be looking for some buying opportunities right here to push the market all the way to the upside. And again, like I said, when price breaks structure, no one knows how far the market is going to go. No one knows, and no one can tell. All right. So from this higher low, I
said yes before.
Okay. So yeah, so from this higher low, price pushed all the way to create a higher high, which is that one right there. So again, we have this higher high, and from that higher high, we can see that price did what? Break structure right here. Again, we had a close of a candle. All right. So it was a verified break of structure. So we had that break of structure. So again, we can pick our gun box and put it from here all the way to that high and see price again. Yeah, quite all right. It's not that kind of a trade, nice trade that would have looked for, but we can see price put back into our discount areas. We would have looked for some buying opportunities on using lower time frame entries, as we'll look at in the course of this course or this lesson. So we look for buying, price pushes to the upside, it breaks structure. Then what happens? We take our gun box from this higher low right here to that higher high before the pullback. And of course, price again pulls back into this discount area. Then it goes on to break structure, which is our daily structure. Okay, so again, we put a break of structure right here. And these breaks of structure, they are there to help us to determine the trend of the market. So again, we create a higher high. After we create a higher high, price begins to pull back. Then we get our gun box, we put it right here on that high. And what happens? Price, of course, came into these discount areas and picked some orders and decided to push to the upside. So let's say we had, again, some nice buying opportunities. Again, we have a break of structure. So you can see how you can just be following the market and the trend using simple methodology of just looking for a break of structure and a pullback into your discount area. So in this situation, price never put back into our discounted area. So that means we are not going to buy. If you're asking why I'm not measuring, because just by the look of eyes, you can see that these structures are already above 400 points. So I mean 300 points. So they qualify to be structure. All right. So again, we break structure right there. And after we break structure, then again, we pick our gun box from this low right here to that high right there. And in this situation, price fails to respect this higher low, but then it also gives us what? It also gives us unconfirmed downtrend. So we only have one high and one low down here. Only have one high and one low. Now, this one is quite very important. Let me remove this. This one is quite very, very, very important because I want you to see where I picked the break. You can see price, wicked into this low, all right? Wicked into this low, but failed to closed above. Even here, price closed above until we closed with this bearish candle. So the close of the low happened right here. You get it? Happened right here. So when this candle closed below, then we had a break of structure. All these were not breaks of structure, they were just wicks into this area. Okay. Let me remove this because they're not important for now. Okay. And are you there?
Yeah.
Okay. So from that high to this low, so we have a higher high and a lower low. Then that's unconfirmed. So what happens? We expect price to pull back, right? So let's say I put my gun box from that high, right? So now I'm putting my gun box from that high. I'm looking for some selling opportunities. That is because this is a daily. So we can't wait for confirmation on daily. Daily is quite too big. And Nasdaq is a buyer's market. All right. So what is happening here? The market then pulls back into this area. And then after the market pulls back into this area, we look for a lower time frame entries. And you can see price was on its way to go and create a lower low. But then price fails to create a lower low. Why? Because again, we can begin to see that we were having much of a complex pullback. You can see we had a low, a high, a higher low, and a higher high. So this was some kind of a complex pullback that price was creating. Okay, so we create a lower high, fails to create a lower low, then price breaks structure. So which one will be our legitimate break of structure? It will be this one here, this one right here. That will be a legitimate break of structure. And we need to find a candle close, which is right there. Okay, so we have now a break of structure. Now, after we have a break of structure right there, as you can see, with this bullish candle, is the one that closed above all these candles. This one failed to close above. The next one failed to close above until this candle right here closed above. So we have a break of structure. Now that we have a break of structure, what happens? We need to see a pullback. How deep will that pullback be? It depends with the objective of the market maker. So you can see that we had one candle pullback right here, all right? One big bearish candlestick. So price pulled back, that's about 400 points. So that is a daily structure. However, it did not pull back to our discount. So we're going to pick our gun box from that low to that high. And you can see price was just in our premium zone, and of which if you're trading a daily structure alone, that wouldn't be a nice trade to take. You would just leave it because it's not worth it. So this one thought to reach its objectives. Then we see price pushes all the way to go and create that high. Then it pulls back. So again, we have a gun box from this low right here to that high, and price gets into our premium, our discount zone. So this is why we'll be looking for some buying opportunities. Again, we break structure to the upside and we create that higher high. All right, create that higher high. And then what happens? Again, price creates a higher high. Then we begin to pull back and we can pick our low from here to that high. And we can see price nicely put back into our discounted zone right here before breaking structure to the upside, which is something that is good. So we'll be looking for some buying opportunities right there because it gives us a nice structure. Again, from here, we can see that price created a higher high, then it pulls back. So again, you get your gun box from this higher low right here to that higher high, and you can see price put back to almost the origin of that move, all right? Put back to almost the origin of that move, and then the market then broke structure to the upside. And yeah, that was a nice trade. If we took a buy, it was a nice trade. And yep. So I believe by just you seeing what I'm doing, I'm sure you are able to do this on your own, right?
Not all of them, but not part of them.
Not all of them, but all of them.
No, part of them. Yeah.
All right. Okay, then you still need to watch this and look at what we are doing, and then you will go through it. Whenever you're having problems, you can
so what I will need, when you finish with this, I don't know if you can, like, there is a lot of 3 main parts on the gun books. So that's the I use them, but I still need to understand very well how to get profit when you choose when you are making your setup.
Okay. Or how to use the gun box.
No, I use it.
Okay.
As I said, it's a way to calculate your profit, right?
Not really. For me, I use the gun box just to find the right zone to buy from and sell from. That's all.
Yeah, that's exactly what I said. But yeah. So you said where you will put your stop loss and where you are going to take your profit.
Where I put my stop loss and my take profit, it's it will come in the next session, because this session is all about
no, that's why I said that when we get there.
Yeah, when we get there,
yeah.
Exactly. So once we start looking at supply and demand, that's when we start looking also at entries. Okay, which is the next section, because this is section 1, market structure. Section 2 is about supply and demand. Section 3, liquidity, and then we round it up. But supply and demand is not that long. I do finish it just in one session. The rest, the rest of the sections, I just do them. It will just require one session with you. I can just say from here, if we do this and we finish market structure, the next session, it may just remain maybe with 2. Do the supply and demand, we mark supply and demands together, then also look at maybe liquidity, of which liquidity I don't usually do it until somebody masters market structure and supply and demand. So the next session is supply and demand. Then I'll give you enough time to master it, do some practices, do some backtesting. Then after you've proven that, okay, you've understood this market structure and supply and demand, and you're able to map and pinpoint where you can take an entry, then we'll go to the next segment and say, okay, let's finish it up now. Okay, so again, here we have a break of structure. Okay, so price never gave us a confirmed structure. So you can see we had a higher high, lower low, then price pushed all the way. So if we had been looking for some selling opportunity, because would of course be looking for, if we put our gun box like this is one of those trades that maybe would have failed if we are just taking trading on a daily, but of course, lower time frame will still tell us what is to expect. So you can see price pushed to the downside. Then what happened? Then the market decided to buy, and price just bought off from there and started pushing to the upside. Now that we have broken structure, the next thing that we're going to expect is price to give us a pullback. So again, we look at this area right here, and price comes into our into our discount. We took a trade right here from here. After we take a trade, then the market goes on to break this daily structure, which is the daily high right here. And what happened? Price then pushed all the way to go and create that high. After the market created this high, we had a small pullback, which if we had put our gun box here to there, you can see that price never even put back to our discounted area. So this is our daily structure. And again, from here, we can pull our gun box from down here to that high. And what happens? We can see price came into our discounted area. So we can say there was a trade. There was a nice trade right there. And we broke structure to the upside again. And what happens? We now have a deeper pullback. So right here, what you can see is that price broke to the downside. So we have a unconfirmed bearish trend on daily, because we only have one low and one high, one low. And what happens? So if we were looking for some selling opportunities, let's say we're looking for a sell from here, this is one of those trades that would have failed, because again, price recovered because it only took one low. So if it was confirmed, it would have been easier, but then price was never confirmed. So again, we break structure to the upside and we create a higher high. Then after we created a higher high, then we pull back again. We can put our gun box from this low to the high and look for somewhat pullbacks if price was going to pull back into this discount, but then it never did. So yeah, that's the reality of the market. Imagine such happening. Yeah, so that's our daily. Then what happens here? So let's say we were looking for some buying opportunities. So we take our gun box from that high to this low right here, from that low to that high. So price came here. We tried to buy, but the buys, failed to work. Then what happens? Then price breaks structure to the downside and gave us a lower low. So now we are unconfirmed bearish. Then what happened? Price pulls back. So in this situation, we'll be looking for some selling opportunities right there. So what happened? Price pushes to the downside. Then it begins to do what? Pull back into this area. Then we sell the market because now we are unconfirmed bearish, but this is a daily. So meaning that on lower time frame, we'll still look for some nice confirmations. Then we break structure to the downside like that. So now that we've broken structure to the downside, what are we going to say? We're going to say this was one push. So you can see from that high to this low, this is one big push, all right, until we see a pullback right there. So that's why we have our pullback. So again, we have to put our gun box from that high to this low right here. And we can see price, yeah, put back partly into our premium zone. And from there, the market then melted and started pushing to the downside. And that was our break of structure to the downside. And again, after we had this break of structure to the downside, we never had any other structure. So it's from that high to this low, that's one structure. Then what happens? We pull our gun box from that high to this low down here, and price pulls back. And then it pulls back into our premium zone. And then there we look for some selling opportunities. Then we target this low. Again, we see price break structure to the downside. Again, from this high all the way to this low, that is the market structure. And again, what happens, we see the market break structure to the downside. So it's just once price begins to break structure to the downside, they're just looking for selling opportunities. And if price starts breaking structure to the upside, you start looking for buying opportunities. As simple as that. So we have a break of structure right there. Now price is bullish. So let's see again, this pullback, it's about 473 points, which is above 300 points. So I'll consider it as a daily structure, though not a good one, but still a daily structure. So now, if we're looking for some buying opportunities, let's say price put back and we failed to catch it. So meaning that here, what is happening is that the market then fails to respect the daily structure in order to keep on buying. So again, daily, we turn bearish round here. Okay, so we become bearish from around here. And then the market from all the way price pushes, creates this lower low. Then we pull back and we create that lower high. And after we create that lower high, then we break the market to the downside right here. And then after we break the market to the downside, the next thing is price pushes to the downside, pulls back again. All right, it creates this lower high, then this lower low down here. So we have this lower low down here. Then what happened? We then push to the upside, respect the lower high, fail to create the lower low, then price continues to the upside and we break structure to the upside. So now we are bullish on daily. Now that we are bullish on daily, what are we going to expect? We expect price to pull back, and of course the market pulled back. So this is a low and that's the high, like that. Okay, so we see price pulls back into our discounted. We look for some nice zones right here, and let's say we buy the market, and what happens? We then take out this high. This was the high that was created. All right, so here what the market did is that it created the high, the lower high, lower low right here, then higher high, higher low, then higher high right there. So after we created that higher high, then price put back, right, create a higher low. And of course, if we put our gun box, obviously it should be, let's just put our gun box so that we don't assume. So from this low right here to that high, yeah, we visited the discounted zone a little bit before price pushed its way to the upside. And again, we break structure right there, we create a high, then our new structure point will be this low right here and that high right there. Again, we see price push back but fails to get into our areas of interest. Then what happens? We see the market break structure like that. So this is our daily structure. And again, we can see, we can still measure this one. Let me check. Yeah, so 370, we're still going to consider it as a daily pullback. So again, we put our gun box like this. So you can see price comes down here, then we push. So we bought and price pushes all the way. Okay, so again, on daily, so some daily structures are going just to be so visible even on our 4-hour structures. Yeah, they're going to coincide with our 4-hour structure. So price pushes, then again, we're going to consider this as a daily structure. Let's see, yeah, it's about 390 points, although it's not a good one, but just to be loyal to my rules, I have to consider it as a daily structure so that I don't break any rules of mine. Then from here, we push all the way to the upside, then we make a small pullback, then we push again to the upside. So let's again look at this. If it qualifies to be a daily pullback, yeah, it's about 400 points. So we can still consider it as a daily pullback. So right here, price is now pulling back on daily. Price is pulling back on daily. And as price is pulling back on daily, I'm looking at this area right here. So this is my live analysis. So I'm looking at this area right here. So price is already in our discounted area. And once we get into these lower areas, then we'll be looking for some buying opportunities and see how far we can go with the market. All right, so that's how you look at the daily market structure. So you can see this is us mapping the daily structure, and just following it like that, we're able to see that, okay, we have some nice thing going on there. All right, any questions?
For now, no. I will watch it again, like later. And if I have any question when the next session, I will ask you.
Okay, all right. Okay, so should we proceed or should I end here?
No, you can go ahead. You can go ahead.
I can go ahead?
Yeah.
All right.
I said that you can proceed with the class.
All right. So now we go to our lower time frame, which is the 4 hours. And on the 4 hours, I may not go back all the way to where we began from, but we're just going to begin from where can we begin from? So on 4 hours, I'm not going to take so much of the price action, but let's begin from right here. All right, so 4 hours, we are going to begin from right here and see what the 4 hour structure was looking like. So right here, this is 4 hours. So we have a lower high, lower low, then the market breaks above. So we can now begin to say, okay, 4 hours is bullish. Okay, so 4 hours is bullish. Now 4 hours is bullish. We need to see a 4 hour pullback. So we'll look at this one. It's about 400 points. Yes, it's above 200 and 200 points. So it qualifies to be a 4 hour structure. So we can see, so you begin to observe that 4 hour will begin to change faster as compared to the way the daily structure was changing. So that's our 4 hour structure. And of course, right here, did we have anything? Let's see this high, because that was the high that the market had created on 4 hours. Let's see. So yep, so let's look at it and see if it was a break of structure. So yep, that was a genuine break of structure because price closed above. So let's just look at it and see if we had a candle closing above, because that's important to us. Okay, so we can see we had a candle, this candle indeed closed. You can see it closed above that high right there. So it was a break of structure on H4, which is a normal H4 structure. So after we have this break of structure on H4, we're just mapping structure, all right? Nothing to do with entries. So it's just you and I mapping structure. So we have a change of structure right here where we break below this low and created that lower low down there. Then what happened? Price pushes, then it creates a higher low right here. I mean, a lower low right there. Then we have a pullback on the 4 hours. So again, we have H4 create a lower high, lower low, then price can see if we begin to add some gun box, let's say we add the gun box right here. So that would have been a very nice sell trade on H4 targeting the lows, right? But again, like I said, this is not so much about the entry, it's just about the mapping of structure. So we have to look at structure. So that's that. So now, what does this mean? So at this moment, when daily created this low, the moment it began to push, we started thinking, this could be our lower low on daily, then price push. So sometimes it may not appear so much clear, all right, on daily, but you can see that we are having some structures being created, and yeah, price is creating structure until we create this lower low. So meaning that once we create this lower low, that means that's our daily lower low. All right, so that's our daily lower low. And what happens? So this all the way from, let me just zoom in a little bit. So all the way from here to here, that was a daily, structure. So you can see even on daily, we had the 4-hour structure, lower low, lower high, lower low, lower high, lower low, lower high, lower low, all right? Until we started thinking this could be a pullback. When it didn't work, then this is now the genuine pullback that came, right? So now we know that daily from there to here, we broke our daily structure, which is this one. So now daily begins to pull back, but the H4 trend shifts from being a bearish trend to being a bullish trend. All right, so let's continue mapping our H4 structure. Okay, so again, we measure this one and look at it. Okay, how many points? This is 200 points. So it qualifies to be our H4 structure. So 200 points, although it never put back into our premium zone. So if we, into our discount zone. So if we wanted to buy the market, maybe we'd say, okay, there was no proper buying because you can see price never put back into this. But if we had put back into these areas, would have looked for some nice buying opportunities. And then price from here creates a lower low, lower high, right? And again, we can take our gun box from here all the way to that high. And again, we fail to come into our lower lows, into our discounted areas, but that's not a problem. Yeah, sometimes such things do happen. So we have a H4 structure, a break of H4 structure. And again, we get our gun box from this low to that high. And then even here, price, okay, it made use of this area of interest. So again, we have broken structure to the upside. We have broken structure again to the upside, creating higher highs. Okay, and then what happens? Price then pulls back again. So again, we can take our gun box from this lower low to that higher high. This situation, price comes into our discounted area. Then price breaks structure. So now we are getting now into our sell zone of a daily structure. So if on daily we were looking to sell the market right here, let's say we are looking for some demand zone right here. All right, so we're looking for some demand zone right here. So what is going to happen here is that as price begins to get, supply zone. So as price begins to get into these areas, we begin to monitor how price is behaving. Now, we are not yet bearish until we see the H4 break structure. So until H4 break structure right here, then we know that the higher high, the lower high on H4 on daily has been created. So the lower high now on daily has been created, and price now will start pushing its way to the downside. So we create a lower low, we pull back right here. And again, if we take our gun box from that high all the way to this low, we'll see that price never came back to our discounted zone. To our premium zone, all right? Price never did that. So what happens is, yeah, such things do happen. So again, we see the market break structure to the downside, and we continue. Price pushes back. That's a 4-hour structure. Okay, and again, here we see price again pulls back. That was a nice sale that might have happened. So nice one right there. So again, we see price breaks structure to the downside and continues doing so, because now we can see these are impulsive legs, all right, showing that the market is in a downtrend. Even on a daily, the market is in a downtrend. So again, we break structure to the downside on 4 hours. And finally, we seem to be breaking our daily structure. We pull back again. And what happens? We break structure to the downside on 4 hours. Again, what happens? We pull back. As you can see, we pull back, then again we push and we break structure to the downside. So for as long as we are breaking structures to the downside, we keep on buying and buying and buying and buying until the trend shifts and changes on us. That's when we start thinking otherwise. I mean, we keep on selling, not buying. So as long as
that's what I wanted to say.
No, it's just that now my brain is tired.
Yeah, yeah. No.
So again, we keep on breaking. So I believe you can see how clean the market structure that we have been drawing is. You can look at that. So once you learn to do this, then you already know what the objective of the market is. You already know the narrative. You say, okay, I'm looking for price to do this. And if price do this, this is what I'm going to do. So just learning this skill of doing this. I think for me, I spent months, close to a year, just learning to do this, you know, until I had to master this, because I realized that identifying the correct market structure is the most important thing when it comes to trading, because if you don't really know where structure is going, you are prone to making a lot of mistakes.
Yeah.
Okay, so again, you can see right here, we pushed to the downside, then we changed our character, we changed our trend. So the downtrend 4 hours then became bullish. Then we saw a continuation to the upside. Then again, we reversed quickly from an uptrend to a downtrend structure on 4 hours. Then price pulled back. So let's see if this pullback was quite okay. It was just okay. So again, price put back and we became bearish. Then after we became bearish, all this leg is just one leg until we created the lower high, lower high on H4. Yeah, lower high on H4. So again, still looking for some selling opportunities. Yeah, and yeah. So after we created this low, then what happened? Then we started creating higher highs, meaning that the lower low on daily has been set. So now the 4 hour trend means that the daily now is pulling back. All right. So again, you can see how we have to work with that structure. So it's just that easy, right? It's a skill that you just need to develop and master it. Once you master it, I'm telling you, trading will become so easy for you, because at least you have a higher time frame bias. And this sometimes, you know, when I was learning it, I also had a problem, because I thought, am I going to master this? But I've become so good with this that sometimes I don't even need to use Trading View to analyze the market. I'll just get my mobile phone, look at the MT4. Yeah, just the MT4. I'm able to trade. Oh, okay, this is where the market is going, and this is what I'm going to do. That's all. It becomes so easy. At first, it was so difficult because I was wondering, am I going to master this? But the more you do it, the more you begin to become a master at it. All right, that's the secret. So more practice is what you need in order to get this thing going for you. All right, so again, we break structure right there, and you can see from this low, we created that high, then we put back, then we broke structure. Okay, so that's structure. So if we were to incorporate gun boxes, so sometimes I'm incorporating gun boxes, sometimes I'm not, but it doesn't mean that you don't have to do the same as well. You have to incorporate gun boxes. It's important because we want to see if price is pulling back into our discount, and we're going to work with gun boxes more once we start looking at entries. Okay, so this is now the situation where I told you to say sometimes the H4 and the daily will coincide, and once that happens, it's okay. So you can see we had a higher high, then a pullback. This is more of a daily structure, but it's still part of a 4 hour structure, so it is okay like that. So again, you can see price came. These are nice buys that I maximize on. You can see how that buy went on to become so profitable. And again, we have a pullback right here, which is 286, which is H4 structure. And yeah, so we break structure right there. then we can see that H4 now turns bearish. So H4 turns bearish, meaning that the daily higher high has been set. So what does that mean? The daily higher high has been set because we have just broken the daily higher high. I mean the daily lower high right here. All right. We have just broken the daily lower high because that was the lower high, lower low. Now we are higher high. So it means that now the daily will start pulling back. All right. So as the daily is pulling back, we begin to observe the market. So we got the lower low, lower high, lower low, lower high, lower low, etc., etc. So let's observe what price is doing. We break the lower low on H4. So again, H4 is bearish. And then let's measure this one right here and see if it's going to be 250 points, which is an H4 structure. So again, we break structure to the downside, looking for some selling opportunities. Let's measure this one right here, and see. Again, this is about 260 points. Okay, what has happened? All right. Okay, so that's 260 points right there. Again, this is our H4 structure. Again, we pull back into this supply and we sell the market, you know. Again, we break structure to the downside. Then we break structure to the upside. Now here, the thing is we are unconfirmed bullish, but yeah, it happens, but we are unconfirmed bullish. So you can just see that it is one leg, right? One leg to the upside, no pullback. And then what happened? We drop drastically to the downside. So again, you can see that the daily is coinciding with the H4, which is not a problem, right? Which is not a problem. Again, what happens? We have a lower low right here, then we pull back. That's about 374 points. That's a 4-hour structure because at least we are above 200 points. So that's a 4-hour structure. And yep, we continue creating lower lows and lower highs on H4. So again, we have this pullback right here. Okay, pullback, that's 240 points, which is okay for structure. All right, we pick that one, structure, then we push to the downside, then we pull back, right? We pull back. So what I'm going to do is that I'm just going to pick, I can pick this one. Let's see this one. Nope, there isn't any close. So we're just going to pick this one right here. And we break structure to the downside. Okay, so now we can see price tries to go up. All right, so we try to be uptrend on 4 hours, right? And again, we have a minor pullback right here, like that. And price again breaks structure to the upside until again we break structure to the downside. So this was a daily lower high, all right? Because now we made the daily pullback, all right, by changing the 4-hour trend. So lower high on daily, then all the way to the downside. So the 4-hour then switched its trend right here, and we became bearish again, and we pushed all the way. Let's check if this candle could give us, that's 263. So we're going to consider this as a 4-hour structure. Okay, though it's not that good, but looking at what is happening, you can see price pushed all the way down. Then we had a nice pullback right there, created that lower high. Then we went all the way down to create the lower low. Then what happens? We then create a break of structure to the upside, meaning that the daily lower low has been set. So now we are pulling back to go and create a lower high on daily. So what happens then? We break structure to the upside on H4, meaning that the H4 now is down bullish. So the next thing is we see a pullback into our discounted areas. Like I said, sometimes you use the gun box. I'm not using it because I just want us to finish that fast. So, but for you, you can practice both using the gun box and also looking at these breaks of structure. So break structure to the upside again, and H4 is consistently now bullish, breaking structure like that. Okay, are you there?
Yes, I'm here.
All right. Okay. And then again, let's see if this one is it meets our criteria. Yeah, it's about 319 points, which is just okay. So it is a break of structure on 4 hours. And then after we mitigate the higher time frame structure, what happens? We turn bearish again. So H4 again changes and becomes bearish. And yep, we pull back, sell something right there. And then again, we continue being bearish. All right. And then what happens after here? We don't have any pullback. So the last higher lower high to be taken out was this one. So price then takes out this lower high. Then daily again, we have turned bullish. So we failed to meet the objective of taking out this low. So price fails to take out this low, but then it turns out to be a bullish structure. And then what happens? We push. Let's see. I don't want to really have some things right here. Okay, so we push all the way to the upside, create that high, then we pull back. You can see this was a huge pullback, and then we break structure to the upside. So we break this high right here. So 4 hour, we were bullish. We were bullish until again we failed to continue. So again, right here, you can see what happened. 4 hour, again, we became bearish. After now, this is now after we've broken above, so we've created a higher high. So now daily is now bullish. So now daily is now pulling back. So this was a lower high, or we can pick this low right here, because that was the last low. So this was the lower high. Okay, and the reason why I've picked this one is this was the lowest low, because this lower high failed to take out the high. As you can see, it just wicked, so it was not valid. So this is the valid one because it pushed the market to go and close above that high. That's the reason why I picked this low. All right, so we have a push to the downside, created the lower low on 4 hours. Then we pull back. Then we pull back and we created that lower low. So lower low, lower high, lower low, lower high, then lower low right here. So again, as we are pulling back to come and mitigate a daily demand zone, all right, coming to mitigate a daily demand zone somewhere right here. So if on the demand, on a daily, we are looking for some buying opportunities right here. So how are we going to know that now the higher low on daily has been formed? So we see that the 4 hour now shifts and becomes bullish. And then now, once the 4 hour shifts and becomes bullish, then we start looking for more buys on 4 hours. So we create a higher high, then we pull back and create a higher low like that. So this is our higher low. H4. Again, we push, we pull back. Let's see. Okay. Yeah, it's a pullback, but not the kind of a pullback that I would want, but we create that higher high and then we pull back. Okay, so we create the pullback That's a 4-hour structure. Then price, we create that higher high, then we pull back again and create the higher low. Then again, we break structure on 4 hours. Then we create that higher high, we pull back. Again, we break structure on 4 hours. So 4 hour is bullish and it's facilitating the bullish daily structure, daily swing. All right, so again, we break structure to the upside. And then this is where now we had that complex structure. So since we are dealing with the 4 hours, we're not going to deal with this. We'll deal with this later. All right, so what happened right here, this was the low. So we can see that price right here became bearish, right? We became bearish, but unconfirmed, and our swing high on 4 hours will be that one. So again, here you can see this was the low that led to the creation of that high, and all this was a complex pullback. Then we became bearish and confirmed, meaning that that was the higher high that created the lower low. So we needed confirmation. So again, what happens? Price then pushes its way to the upside and creates that high, meaning that we were just unconfirmed bearish. So the daily and the 4 hours, they seem to have met, right? Which is okay. And like I said, that is going to happen. So again, what do we see right here? We'll create that high. So again, here, it's going to still be our 4 hour structure, because again, like I said, sometimes daily and 4 hours, they're going to, coincide, and it's okay. So you may think, what about these structures? These are inside structures, they are minor structures, and we're not going to consider them because they are not part of the 4 hour structure. They're inside this 4 hour structure. All right, so now we break out, we create a higher low on 4 hours, a higher high on 4 hours, a higher low on 4 hours. All right, at this moment, we can see that the 4 hour structure is coinciding with the daily structure, but it's okay. We can just pick it like that because that's what the market gives us. And then pushes up to the upside, creates that higher high. Then we can measure this one and see if it's a 4 hour structure. Again, you can see this one is 183. So it falls short, all right, of our standard. So we're not going to pick it as a 4 hour structure. So from this higher low all the way to that higher high, that becomes our 4 hour structure. So this is how now you begin to refine your structure, right? Because you are now looking for the standards to be made. Again, we can measure this one from that high to see if it's going to meet our 4 hour structure criteria. All right, so you can see it's about 317. So it's a 4 hour structure, and we pick it like that. And what happened? Price then comes down to this area, we mitigate it, then price pushes its way to the upside. Again, we break structure. So again, we have the 4 hour structure, which is this. So we can see that the daily and the 4 hours, like I said, they are coinciding, which is okay. So in this situation here, what we have, and this is the current analysis that I'm looking for, is I want to see price come back to these areas. And if I bring in supply and demand, there are certain areas that I'm looking forward to be buying the market from, so that we can see where we can take the market to. All right, so I think I'm going to end here for today. I'm beginning to lag in what I'm saying. All right, so we have done the market structure mapping from the higher time frame to the lower time frame, and I know it may look so messed up and confusing, but just follow the procedure, familiarize yourself with this, and do it until it makes sense. And then the moment we bring in supply and demand into this, then it will even make more sense, and you see the reason why we are doing what we are doing. Okay. All right.
So so will we still maintain our tomorrow schedule?
Tomorrow's schedule, you requested that we meet at what time? That would be 7 a.m.
Well, 7 a.m. It's good for it's. I don't have any problem if you want.
Okay, all right. So I'll
I take
confirm.
because I took the days off for that just to finish the training. I have tomorrow and Wednesday too.
Or to finish the training, you took some days off.
Yeah, I
All
told
right.
you that last week. I took
okay.
tomorrow and Wednesday. It will be because like today I just finished. When you said that, are you waiting? I haven't waited yet because I was still my computer working. So it's better like this.
Okay. All right. Okay. So okay, tomorrow then I'll confirm with you. Yeah, I'll confirm with you if we are going to proceed. And if we're going to proceed, we are still going to proceed. But let's communicate so that I give you also how my day will be in case maybe I'll maybe having maybe a session with another client about the same time. Then I'll still confirm with you to say, okay, we can go ahead or we can reschedule. Okay, because again, I would also want you to go through what we have gone through. And
yeah, but if you said that we will schedule, it will be, as I said, it will be hard for me. But that's why I sent you the message the other day, and you said it's okay. You confirm it.
Yeah, I confirmed. Yeah. So if you tell me that all you need is first of all to give you all this information and then you go through it on your own time, that's not a problem with me. But my concern is I'm looking at the rate of consumption of this information because I don't want to dump so much on you to a point that you become paralyzed with what to do. Okay, this is why I wanted it to take its stock so that once you consume this segment, unless you tell me that you're so fast that you want to start trading right away as soon as possible, yeah, then I can dump all that information. But it depends with how fast you are learning and you're applying this concept. That's not a problem.
So myself, I use sometimes I use the a demo, the prepared trading account to make some practice. But before I trade it's because I stopped years ago because of the things I told you. But I use paper trading to trade. Like today, I made some tests today.
Oh, you made some profits today?
Yeah, I make a trade on one trade. I read that it's a demo account. It's not.
Yeah,
a real account.
I know.
It's I made 1,500.
Oh wow, that was great. You were selling?
I think it was it was selling. I opened it to show you. I can show you what I did.
Okay, no problem.
Only today I tried.
You can share the screen. I'm sure you're a co-host. Let me check.
Let's check this. That's only today. If I send it to you, I can share it with on this like I shared on Fiverr.
Okay. Are you okay? Let me check. Okay.
Good.
Okay. All right. That was great. So it's this one in green, right? Or all these positions.
All the
Okay,
green positions.
I see it.
You can see it. It's 1,596.
1,000. Yeah, I've seen
I
it.
have some loss too. It's not only the again. I have some loss like 122 minus 2, and I have 56. It's again on it. And I have 4.
Okay.
Yeah.
No, that was great. That was great. Yeah. I also took some. Let me share. I was buying. In fact, I was buying to sell, but I didn't take the sell because I'd already made enough on a buy. So
Okay.
yeah, let me just show you. It will come as
are you using some kind of signal things like this, or
I don't normally give signals, but I've been considering because there are some guys that I'm helping out. So they requested that I should be giving them some setup, some signals. So I started today giving them, just assisting them with some trade entries. If I take a trade, the same trade I take, they also take it.
Oh, I see what you mean.
Yeah. So, but I'm considering creating a group because I had a very big Telegram group and also Discord, but I had to stop it because it was giving me a lot of pressure. No,
yeah,
but yeah, a lot of clients, students were coming to me. Oh, what about this? So I was responding to a lot of texts, and at the end of the day, I was getting exhausted. So I had to shut it down and just stop all those things.
Yeah, but if you want to do it, you have to have someone who can manage it. So otherwise, you won't be able to handle it. Myself, I don't like things like this. I don't have time for that because I work. When I work, if I take a few minutes, like a break or for my lunch, I have time. But I have a lot of emails coming on. That's I can't do it. I can go to things like this during my work time.
Yeah, exactly. So yeah, I'll consider, but if I see an opportunity while you're learning, I'll be, if you're free and you're online, I'll be sending something, say, oh, okay, check on this one, check about this one, look at this one, and we'll see how we proceed from there.
Yeah, but that's the one that you sent to me. It's not you are not using candlestick, right?
I was using candlestick. It's just that I zoomed in, I zoomed out. Yeah, I just zoomed out, and yeah, I was using candlestick. I just zoomed out, and it's just on an MT4. So that was the entry for a buy.
For myself, I use an MT5.
Or you use MT5. Oh, okay. Yeah, so that was mostly I take trade. That's like you have seen this MT4 entry. That's how I take. Sometimes I'll just be with a phone wherever I am. If I see anything that is looks so familiar, looks so nice to me, I'll just take a trade on a phone and put a stop loss and wait for the market to do its thing. It's like all these analysis things that I'll be teaching you. For me, they're just in my head. Like,
yeah, so, I understand.
Yeah. So and that's the kind of a mastery that I desire to share with those that are ready to take their trading to the next level.
Yeah, that's good. But are you full-time trader or just part-time?
No, for me, I'm a full-time trader. Trading is what I do.
Oh, okay.
Trading is what I do, and I only trade Nasdaq, nothing else.
Oh, Nasdaq, okay. But are you using trade book farms also or not?
Yeah, I had an account with on ProFirm, but there was a time when I blew it. Yeah, so I'm considering to get another one, but much of it is just with brokers, not ProFirm.
Okay.
Yeah. But ProFirms are good. The only thing I hate with ProFirm is just their limits, daily drawdowns and all those things. So I don't trade well with a lot of restrictions.
Yeah, okay. So but sometimes you use them, right? Yeah,
sometimes I use them. I use them sometimes. I still have an account with what ProFirm is this? True Forex funds. That's one of the ProFirm that I like. I don't like HTMO that much, but I like True Forex funds.
Okay.
Yeah, because of certain restrictions which FTMO has, like you can't keep trades running overnight, but True Forex funds, you can keep trades running overnight. You can keep trades running over the weekend. For example, if I took a buy and I saw that, oh, this is going to be a long-term buy, and I buy it on Friday, I can still keep my trades open during the weekends until next week, Monday. But with FTMO, that would be violation of their rules and all that, their terms.
Oh, okay.
Yeah. So I love those things which are flexible with their rules.
Okay. But do you have like like we talked about the strategy before, do you have a specific strategy that you are using that to
Do I
make
have
sure that, sorry?
do I have the, yeah, you can come again?
I said that if you are using specific strategy, a profitable strategy to like
For my
for
personal trades.
trading junior, yeah.
No, it's the same one. The same one that I'm sharing with you is the one that I
Oh,
use.
okay, same one. Okay.
Yeah, I don't have any other strategy. It's the same
Okay,
one that I'm sharing with you. It's just that it has not yet started taking shape. Okay, it has just not yet started because like, okay, for me, my teaching approach is I've done teaching. Okay, so I'm a teacher by profession. So I look, yeah, I look at the needs assessment. All right, so I teach from the background of being a professional teacher. Okay, so I don't assume that a learner understands what I'm teaching them. That's why I have to emphasize and re-emphasize and take time on certain topics in order to drill down the information, because I know learners have got different learning span, right? There are others who are fast learners, others who are slow learners. So I have to balance. Okay. Yeah, so I have to balance. So I don't have to, this is why I would start with the theory. I explain the whole concept. You understand idea of what we're going to be looking at. So if you get it from the theory concept, if I just dump the theory on you, it's more like I've dumped the whole strategy. So when we get to the charts, it's just me now applying everything that I was explaining to you in the theory on the charts, and that makes my work easy.
Yeah.
Yeah, so it's a whole strategy. It's just that we are taking it part by part by part. It may not seem to be making sense right now, but the moment we move on to the next segment to say, okay, now we're going to look at this and combine this and this, that's when you say, oh, okay, now I begin to understand why you were doing this and this and this and that. Now it is making sense. You see, and you'll be able to confidently apply it now to say, okay, I can now apply it, I can now see it for myself, and it will just become so easy for you. Yeah.
So hopefully we'll there one day. I said that hopefully we'll there soon.
Yeah, definitely you will learn. I've taught this strategy to people that never even knew anything about Forex and they've been profitable.
Okay, good.
Yeah. Now, somebody who never even understood anything, and I took them from scratch and taught them this concept in 2 weeks, and they've been profitable. Even up to now, some have been trading and they've even been making more money than myself from the same things that I taught them.
Okay.
Yeah, so just be patient and just apply it the way I present it to you. If I tell you I want you to do this, just follow it through and do it. No shortcuts. You'll see the benefit of it.
Okay.
Yeah.
Good. Yeah, I see. Actually, you know, I use other platforms there. I saw you.
You use what? You can?
I said that I saw you. I saw some of your courses.
Oh, you saw some of my courses?
Yes, I saw some of your classes.
Where?
On Udemy.
Oh yeah. So I've put some of these courses on Udemy. Yeah, I've put them on Udemy. That's the only thing that, you know. So
It's gone.
Into Nasdaq, currencies, US30, but it's just one strategy. I don't have many strategies, like, you know. The only different strategy that I have, maybe it's for volatilities, and that I just produced it to help those that trade volatilities. It's basically retail concept. But when it comes to the strategy that I use, the same one that I'm sharing with you now is the one that I trade. Okay. Yeah.
Yeah. Okay. So then that's good.
Yeah. So let's just follow the guidelines that I gave you. We'll look at this the psychology side of trading. We'll deal with it. Yeah, it's a full complete package, like everything that you need to know about trading.
Yeah, I will follow them. I will try to listen to the recordings again tonight.
Uh-huh.
Yeah.
All right. So so about the orders, are you going to approve the dispute or
you mean your delivery?
yeah, I mean the delivery.
Oh, okay, send it.
Are you comfortable? Should I deliver it, or what do you want?
Look, even if you like, when you have order like this, even if you deliver it today, you can authorize it in 10 days.
Okay.
So yeah, I can still do it, but you know, it's because I don't want to be in trouble again. You see, that's the that's my fear. The fear.
No,
It's not because I don't trust you.
no,
I trust you. I see that you are a serious person, but because they warned me here already about that on Fiverr.
yeah, I know. But then it would take us, like I said, if you know, it may take us 10 days, it may take us 20 days, but then what purpose would it be to keep an order open for 20 days?
Yeah, I understand.
Yeah,
so how many sessions you have left with me?
for you, I've left with if more than I think more than 4. That's okay. Sessions are still there with you. I'm not ending the moment we finish up everything, like the moment I finish teaching you. That's not, I'm not going to just let you be on your own after I'm done teaching you. No. Okay, I understand you are new to this concept. So if I just give you information and then I dump you, it'll be so wrong of me. Okay, it'll be so wrong of me. It's just that I don't know if there's a possibility of you trying to contact others. I've got other clients that who can tell you, who can testify about what I'm doing. I'm still talking to them even right now. I still give them signals. Others, they bought my course, I mean my gig or my lessons 3 months, 4 months ago, and I'm still with them even up to now. And even one, I was having a session with him this morning today. I was having a session with him. I have a session every Monday. I have a session with him to break down the market for the week, and then I give him signals, and we still do chat constantly, almost every now and then on Fiverr.
Oh, you provide signal too?
Yeah, he's my student, so I assist him, all right, with the trades that I take, not that I provide signals. I only provide signals to those that I want to assist. The other one is from Pakistan. So he bought my gig via a friend who is not even a trader, from German. He purchased, I sent him a course, I sent him everything. He said, no, man, let's chat on WhatsApp. I sent him a line, and we've been chatting on WhatsApp ever since, and we've been having sessions ever since. So he bought once, and we are still chatting even up to now. This morning, again, I also chatted with him. I gave him my signal. He made some good money out of it and all that. So there are quite many. So for me, I create more like a community, although I've not just created a group. I chat them individually because I want to help. All right. So this is why I was saying that whether you approve it today, you approve it in 10 days, the difference will still be the same. I'm still going to be there.
Yeah,
okay?
But I have a question for you. Like when you give him signal like this, are you he's sharing the profit with you, or how do you do
it? If I give him signals, what I do is he knows how to, let me just send you a screenshot. He knows how to analyze the market, all right, based off what I've taught him. So he knows how to analyze the market. So he will analyze the market, then he will tell me to say okay, let me show you this. So that was his analysis. And then right here, and this was my entry. I think, where did I tell him to buy? Okay. So I'll send you most of these screenshots and then you check them out. And then that was his profit. Okay. So he begged me, because I never wanted to be giving him signals. So he begged me, said, man, I want to learn fast. So what we're going to do is, whenever you're taking a trade, you also tell me so that I refuse that first. And then he said, no, I want to learn so that I can gain confidence, because if I don't have the confidence, how am I going to trade? Then I accepted and I said, okay, no problem. Let's see how it goes. Right. And that's how I started doing it. Right. Assisting him.
Mm-hmm.
So it's more like just me trying to assist out, trying just to be there for the people that I train and teach. And the reason why I do this is because for me, no one was there for me. I learned these things all by myself. So I don't want to also, allow or let others go through what I went through when I have the knowledge that can help them. Okay. So that's why I've gone beyond, I've taken an extra effort of providing these services just to ensure that I provide, number one, I prove my legitimacy, and number two, just to help out traders. Because if a lot of us are making money in these markets, then a lot of us are going to be happy. Okay.
Yeah, like there is one thing. The reason why I ask you, if you want to coach me like this, I don't have any problem to give you a percentage on it, on what I do. If you'd like, it depends on you. It's up to you.
Okay. Yeah, like I said, I'll coach you. I'll coach you.
Mm-hmm.
Right? I'll coach you. Okay. Mm-hmm. Yeah. I'll coach you as long as you prove to me that you are. One thing that I don't really like, there's one student that I was talking to. Okay, he became passive because I was providing almost everything for him. Right, so he became lazy when it comes to analyzing. I would give him work to do, then he wouldn't do it. Right, but he would want a session from me. So I had to tell him to say, you know what, I'm stopping this until you provide the answers to the assignment that I gave you. So when he realized that, then he became serious, because now he realized that I'm serious with what I'm doing. So what I need for me is, trading is so complicated, like it requires a lot. It is all about using your brain power. You understand? So if you're dealing with a person who is not so much serious with the charts and the market, it becomes draining on the person who's providing the help. Okay, so for me to help you, you also need to help me by being committed to the work, right? You show your commitment to the work. You say, okay, I'm going to be there. If we say, okay, we are going to look at this, I'm going to give you this assignment, we are going to study this and this and this, then in 3 days' time, I want you to work on this and then present to me this kind of work. Then you have to do it.
I don't have any problem.
I have to see your progress.
It's the only thing, I don't have a lot of time, but I will do it because I want to do this only. I don't want to. I work at home, but I still want just to go to trade. You see what I mean? Because I have a lot of stuff to do, even if I'm working at home. But I have other person to assist. You see.
Yeah,
it's tough for me.
So as long as you show me to say, okay, I'm putting in the work, all right, I'm putting in the work. You show me your commitment side. I don't have any problem but to help out. I've helped so many traders. Some have not even paid me. I created a free Forex group and I had about almost 150 students who are I was just providing free courses for them, giving them free information, because, in the end, it's all about getting this knowledge. And sometimes, why would I even charge high amounts of money if I'm able to make money from the Forex market? It's all about helping out. You get it?
Yeah, I understand. But myself, if you do it, I don't have a problem. I can, like, if I have an account, like for now, I won't have an account for now. But
yeah, now don't even focus on funding an account, just focus on getting the right knowledge.
Yeah.
And I can even assure you, even if you funded your account, I'm one kind of a person, I don't like account management. So I'm not going to ask you to say, no, give me your account, let me trade for you, and then we'll share this. No. Right? I'll provide the knowledge for you. If you want assistance in terms of a setup, I'll give you the setup. Okay, this is what I'm looking for. This is what I'm looking at. All right, let's see how the market is going to work. Okay, take this trade. I'm also taking this trade. I'll send you the screenshot of my entries, which I've taken, so that you may also be confident that you're trading. I'm also trading. I'm not just giving you to take a trade which I'm not taking. I'll send you the screenshot. Okay, this is where I've taken entries. If it goes into a loss, I'll also send you a screenshot. I've also lost. You get it? So that you understand what I want. What I'm sharing with you is what I'm doing, not something that I'm not doing.
Okay, cool. Good.
So that's that. So,
no, that's exactly what I need, because I told you I met one recently before
yeah.
I met you. So he's gone. So
yeah,
that's what I need. That's what I need. Exactly what you just said. And you said that this is the setup I get. Take this trade. That's the one. And then at the meantime, I'm studying your strategy, the market structure and everything.
No problem. That's not a problem. Even tomorrow I can send you. I even can begin even this week. I can be sending you. I was looking at this setup. How did it go with you while you're still studying and learning? Okay.
Yeah, I will. But there's another one I want to know. When people talk about the A+ setup,
There?
they usually talk about the A+ setup. It's mean that it's a big, it's important setup, like they make huge money on the new setup.
The new setup?
No, it's a setup, A+ setup.
A+ setup.
Do you heard about that?
No.
No, maybe you know it in your word, your own word. So that's fine.
Oh, yeah, maybe. Maybe I know it in a different way, but
yeah.
A+ setup. An A+ setup is just a high probability setup. It's not just a high probability.
Yeah. That's the same way I think about it.
Yeah. So there are such kind of setups, and yeah, the market will just present itself so many setups.
Yeah.
Okay. Yeah. So let me show you. It's just that I don't know how I can share. Is there a possibility of sharing somebody else's? Okay, let me just show you what we were discussing with another client, as just to show you that. Okay. What I'm telling you is something that, yeah. Okay, I'm trying to exit this. Just a moment. Okay. All right. So let me go to Fiverr. And this is the guy. I'm sure you're able to see my account. Okay, so this is the guy. This one, I had a session with him how many months ago? It should be some 3 to 4 months ago. Right, and I'm still chatting because you can see these are recent chats, 26th of June. Yeah, I had a session with him, I'm sure, some months ago, right? If it's not 2 months or 3 months ago, okay? And we are still in good, yeah, you can see 17th April, right? This is June, okay? 17th April, this is June. Today I was communicating with him, 26th of June. You can see, so this is me sending him some setups, and this is me sending him the trades that I took, and I was telling him to say you can close. You can see that's me, and I was telling him where to put the stop, the take profit, because he asked me to say
the stop loss.
Yeah, okay, what are you targeting, mentor? So he was asking me, because I told him buy now. You can see here. Right now.
Okay.
So, yeah, so this is the session that I had with him today. Yeah, and this is the video that I had with him today. And we finished the lessons when I was somewhere in April, and we are still together up to now. Why? Because I treasure my clients. So yeah. So this is, you can see, this in our discounted area. we were analyzing the markets together.
Okay.
So, but for the 4-hour structure, consider that as our also M15 structure. But for now, so that's me, breaking down the market for today and the trades that we are going to take. Use any of these areas just to find some nice resistance in order, or for some nice supplies in order for it to start going to the downside. All right, so this is how I'm looking at it. So we buying opportunities, then at least we have confirmation. So this is the buy that we took. Just wait until further confirmation, because again, there's a possibility that the market can just continue going to the downside until it takes out this low. And then maybe that's when it comes, does this, then we can look for price. Okay, are you there?
Yes, I'm here. I was listening. Yeah.
So you've seen it, right?
Yeah.
So that's that. I've got nothing to hide. I'm just here to be of help. So these are others. These ones. This one. I'm going to have a session with him. I needed to have a session with him last week, but he wasn't online. Even him, he has already delivered his order. You can see he has already delivered, but I'm still having sessions with him. So when was the order approved? Yeah, 19th of June. I'm still having a session with him. The other one is this one. Tomorrow, I'll be having a session with this guy. All right. He also delivered his order a long time ago. So let me also show you. Should be these guys ordered almost at the same time, and they've already delivered their order. All right. This one delivered on 18th. I mean, approved on the 18th, and I'm still having a session with him. So you can see the last time we had a session, that was on 19th of June, when he had already delivered the order.
Okay.
Yeah. So this guy, I've been with this person for almost how many years? I can say even 2 years from the time you can see the order was delivered when? 19th of June. This one, we have now stopped talking via Fiverr. I now talk to him personally on his WhatsApp line. So I contact him almost every day on his WhatsApp line. And we do have sessions almost every day on his WhatsApp line. You can see here where he asked about my WhatsApp line. Okay, Moses, do you have WhatsApp? I said, yes. And then I sent him my line. So since then, we have been talking over WhatsApp. And he's been a client since 2022.
Wow.
Yeah. So
yeah, that's I really want to stick on trading now. I don't want to leave it anymore. So see, I don't want to leave this. I want to continue.
Okay. Yeah. We'll work together.
Okay. So thank you then.
All right.
Thank you.
Okay, thank you, and
I'll see. So we'll talk tomorrow.
Yeah, tomorrow.
Yeah. So okay, so we'll talk tomorrow morning. That's right.
Yeah, tomorrow morning. Your tomorrow morning will be 1 p.m. on my this side. So
okay. Okay, it's good for you.
Yeah, it's good for me because during that time, I don't usually have anything because I'll be waiting for lunch to be set. So I don't usually have any serious things to do.
Okay.
All right.
Okay, then. So thank you very much. We spent a lot of time and we start spending time together. Maybe we can be developing a good relationship one day. You never know.
Yeah, definitely. I may even come to Canada and you'll be that kind of a person who is going to help me with everything.
No problem. So you can, when we be friends, you can come to my house. No problem.
Yeah, you see, that's how relationships are built. All right, thank you so much.
You're welcome.
Have a blessed day. Bye.
You too. Thank you. Bye-bye.
All right, bye.
Yeah.